receiving money or drawing it down from the funding agencies. So this is what I'm going through today, is receiving a payment, undeposited funds, creating a deposit, posting in advance, reversing payments, reports about those topics, and then budgeting. For the programs that use this, they have to actually budget a little bit differently than if you're receiving a grant. So as a requirement by the federal government, we have to use an accrual basis for accounting. And in accounts receivable, what that means for us is that a sales invoice represents revenue that the program has earned. The sale is treated as income even before it's actually been paid. So there's a little difference there with probably what we're used to if we're running a program funded by a grant, is the monitors, when they do their drawdowns to get paid through accounts receivable, most of the activity happens pretty quickly. But for other programs like solid waste or IT, when they create a bill, it already is shown as a revenue even before they get paid. So for those of us that got our January invoices from solid waste, it's at the beginning of each month they have their invoices created. So when that happens, that's immediately recognized as revenue, even though it's not yet collected. And that's through the accrual basis accounting, we've accrued the revenue. Through the use of accounts receivable, when an invoice is created, we debit the receivables account, we credit revenue. So if we were looking at our trial balance and you wanted to follow what's happening with your drawdowns, or if we're in a program that operates off its own revenue, we're looking at those balances to see what's outstanding. The accrual accounting method is allowed by generally accepted accounting principles. And that recognizes costs and expenses when they occur rather than when actual cash is exchanged. Just like when we expense money to pay a bill, on our financial reports, once that's approved, it immediately shows it as expense, even though no cash has yet changed hands. So it's the same concept, but with revenue. These are the programs that are using order entry or accounts receivable. I have there as drawdown, just basically meaning the finance monitors, whether it's Head Start funds, commodity funds, maternal child and health funds, any of these programs that have money drawn down from the federal government goes through this process. Adult Corrections also uses it for their drug test billing. So if any of you have had your employees tested through Adult Corrections, the invoice you got was from Adult Corrections through Intacct. Daycare, when the daycare is open and when they have people's children in care, they're able to bill parents based on hours or whatever formula they use to make that determination. For people who use the TED loan program to pay utility bills, we use this system to track the loans that are issued. Tribal utilities, when your program gets the bill for their fees, they're using this. Insurance. So through finance, the insurance department that bills for claims and then for regular premiums, that's using Intacct. KNI and Koya when they sell radio ads. Solid waste for their billing, as we've said. Alcohol treatment also bills as it relates to their drug testing. And then IT. So I'm sure over the last year, a lot of our programs have been buying computer equipment and other things to accommodate working from home or meeting online like we are now. Those sales IT have been through Intacct. So it's a pretty versatile system that can be made to use it for any of our program's business purposes. All right. Well, we're going to go ahead and get into Intacct. And so your permissions may not allow for it, but there's an area we use in Intacct called order entry. And when we go to drawdown, and so I've created some samples, so we're going to use drawdown as the field or as the workflow. Monitors here come through and they'll enter however much money is being drawn down from a funding source. So I don't see Head Start off the top at some of this, but for example, we've just gone through the payroll process. So as payroll is prepared, and on Friday, it's usually when payroll is completed, as long as timesheets were done timely, we now know how much payroll costs the program. So your program monitor, whether it's Tracy or Sierra, Mary, once they know how much payroll costs, they can prepare a drawdown from the funding agency for whatever the cost of your payroll is. And so they'll include almost just like a purchase order. They're going to include the amount that they've requested, typically who the customer is, meaning the funding agency, and then the funding source that's going to receive the funds. And so once that money comes in, electronically, our accounts receivable department can find that open invoice and make the payment to that so everything is coded correctly, and then we can reimburse the payroll department for the cost of our payroll. So I have a test win in here I put in here for $2. Creating the invoice looks just like creating a purchase request, and functionally it's the exact same thing. With the only difference being we use customers instead of using vendors. So I've created one for a customer, Tess McTesterson. In the message field, I put the confirmation number that'll be from the drawdown. Each funding source has their own drawdown number. In most cases, yes, but they also might include, like for yours, Paulette, the drawdowns might be all like put together with both of your funding sources they use to draw down. So I think Tracy has one for Head Start and one for Early Head Start. So she would include maybe 2 lines, one for the award for Head Start and one for Early Head Start. And we'll look at one of yours here in a minute. And so they're able then to put whatever the confirmation number is from the funding agency once they've done their drawdown request. If there's any attachments they want to include, like the confirmation receipt, that kind of stuff, they'll include that with their attachments. And then just like our purchasing, they'll have their program, their funding source, checkbook, the account number being used. This is revenue, so I have a revenue account number there. Memo and description. I just did $2, so it's kind of set up like a blanket purchase order. So if we wanted to use it multiple times, we can. And so when the funds come in, the people from accounts receivable are able then to research. We have $2 coming in from if Tess McTesterson was a funding agency, and it was for bank account 35, they would then be able to find that information to pay. And we can see payment status is open, meaning this hasn't been paid. And so they do this for all these activities. And like I said, we have tribal utilities, childcare, adult corrections, COYA, KNI, TED. Indirect cost is processed this way. IT, here's the 2 insurances. So we use it for anything. We design it to whatever accommodates what we're doing. For programs that receive funding through a federal government or a state agency, just someone else other than the tribe, we'll prepare something called a grant award notification. Okay. So here's the award for Head Start. This was processed in September 2019. So when Tracy gets the award information, we set up a new funding source, that kind of stuff. She comes in here and creates an award notification with the funding source that's being used then and the amount of the award. So she had the quantity of 1.7 million and a price of 1, just like a blanket purchase order. And then each time it's time to draw down based on your payroll, or once you've requested to pay a bill for utilities or food or whatever activity you're doing. This is what Tracy is doing to put out there that we're waiting for money to be received from HHS. And then once that money is received, accounts receivable, basically Becky, Shirley, or Hope, can easily find that information and make the payment to it without losing the information that we're tracking. Now, if we go in the history tab, just like a purchase order, we can see the tracking of how every time the stuff gets converted into another document. So used quite a lot. So your grant was used roughly 232 times for different drawdowns. Basically, anytime we need money to fund your department's activities, Tracy's doing some sort of drawdown activity to match what's happening and to reduce this balance that's sitting out there. When she creates that, there's a balance sitting on your trial balance saying that there's a grant receivable out there, so that if we see that, you can look and see, okay, we're still expecting to have another 600,000 left or whatever's left after each time she does a drawdown. And that would go for commodities if you have drawdowns. Maternal, child, and health would go for the same way. So we have another question. Head Start will fall under cost reimbursement for the, whatever the acronym is, reimbursements. So if there's a reimbursement, we do have a workflow for just cost reimbursements. So if we're expecting money to come in and the monitor is aware of that, they can include that here as a way to get paid. So it puts in an amount out there that accounts receivable has to receive. If they receive it without this cost reimbursement being done, there's another method that accounts receivable uses where they can call it other receipts and include the money as being received to the appropriate funding source. So when we're sitting out here and it's time to receive our payment, there's a way to receive a payment through accounts receivable. We can include the type of fund it is. So if it's electronic payment, we choose our bank account and the customer or funding agency that sent us the money. They then get to see a screen that tells them, here's the outstanding draws that haven't been paid through the receipt of funds yet. So we have draw 8101, draw 8769. One we're waiting for $10,000 and the other one's the $2 one we're looking at. So when the funds are received, they can then record whatever it is they're receiving. So let's say it's 10,000, $2 has come in, and that's our reference number through the bank account. Once we plug in that amount, Intacct will just automatically apply the largest amount first to the oldest invoice, and then any remaining amounts to any additional ones. I put in exactly what was due, so Intacct separated the way it's supposed to be. And once they click save, your cash would then reflect that that money's been received. If we don't receive the funds, your trial balance will show an accounts receivable balance. This reduces the accounts receivable from, like in this case, $10,002. Once the money is received, your balance would go to zero, but your cash will increase by $10,002. So on the purchasing side, like for Lynette's final approval for our vouchers is she's making sure the cash is available before approving a request. And so often it's this process, drawing down funds from the funding agency. Each funding agency has like a different timeline of how quickly the funds actually come to the tribe. Then once the funds are received, getting them recorded so that Lynette has verification that yes, the funds have come in. If we work in solid waste, childcare and all that, they follow the exact same steps. If we receive it directly to bank account, like how I have this selected, if I click save, it creates a deposit in Intacct that we have deposited $10,002, which is good because on the back end, when our accountants reconcile the bank account, the bank statements received, we would expect that when we receive $10,002 in Intacct, the trailing bank documentation is going to match that we've received $10,002. Solid waste, though, is receiving payments sometimes for 100 people all in one day. And if they do this step, keep changing customers from me to Paulette to Tony and whoever else might have to pay solid waste for trash services, this might create 50 different transactions with 50 different deposits. So if our accountants are looking at the bank statement only has one deposit. It won't include 50. So we encourage the program users that are using accounts receivable to use what's called an undeposited funds account. And so we actually have a general ledger account for undeposited funds that would tell them this is where we're going to park the money until we're ready to create one giant deposit. So they might be receiving payments into undeposited funds for a day or two, and then once they're ready to send that money forward to finance to go to the bank, we've created our undeposited funds. They actually go into Intacct to add a deposit to whatever bank account they're using, and then manually create the deposit themselves, including choosing the day that the deposit will be recognized going to the bank. So a lot of our programs take on some pretty good responsibility on not only receiving the money, creating those invoices and balancing them, but they're also responsible for making sure the date they use matches what activity actually occurs at the bank. If I create a deposit to today's date, but didn't send the payments forward until Thursday because I got busy or there was other payments that were coming in, at the end of the month, when Lori gets the bank statement for the month and she goes to reconcile, there's going to be a difference. Our bank records will show we received money on Thursday, but our Intacct records won't show that there was a deposit that same day. Happens one time, it might be easy enough for her to figure out that we just didn't date it correctly. But if we were doing that all month long, it would create a pretty big nightmare in accounting. So we have to make sure any of the dates we use match actual bank activity. The thing about using undeposited funds is the payments received as undeposited funds do not get added to cash immediately, since the money isn't going to the bank according to the process the program is using. It allows us to receive payments against the invoices so we can get them paid, no longer look like they're late or outstanding. But if we create a deposit or fail to create the deposit, we leave the stuff in undeposited funds because, hey, we paid that invoice. It can create a scenario for programs where you've received a payment but didn't deposit it. So now we can't approve your purchasing request because you don't have the cash to support what you've done. And so that leads us into the next step of how do we know if we have undeposited funds? In accounts receivable, we have registers just like we do accounts payable to see checks received. So we can go to our receipts. And I was looking at one earlier. So we're going to use inception to date, the entire life of Intacct. We had a customer travel advance repayment. I have undeposited receipts only checked, meaning I want to see any time we received the payment but didn't deposit the check. So now that Intacct's built the report, we actually have two instances, March of 2020, where we said we had money coming in through travel advance repayment. So what that means is somebody went on travel and owed their program money for the expense. They weren't able to provide enough documentation to support the cost of travel. It's the same check number, the same amount, and they're not deposited. So if we were running solid waste or alcohol treatment, IT, someone like that, and we had some undeposited funds, and we can't figure out why we don't have enough cash to support something, so we're getting our vouchers declined, this would be a report we would look at to see what's going on and have we not deposited our funds. Here we can see travel hasn't been deposited. And it looks like the same check was entered twice. So for the person responsible for looking at this stuff, in this case, the travel monitor, this is a flag to them that there's a problem out there. If the bank reconciliation is done and there wasn't a problem on the bank reconciliation, then we know there's a problem with data entry. They need to resolve and research this to see, number one, has that check 54449 actually been deposited? If it has and it matches bank records, that means we have another entry out there for this amount. And if these aren't correct, we need to resolve these by either reversing these payments or taking the action that we need to. If we work in solid waste or any other departments and we had a list of undeposited funds, this total here is $208. Did we actually send those checks to be deposited? If not, we've received them and never sent them to the bank. So now we're going to have to take the next steps to correct that. Recently, TUC had a similar situation like this, where they received some checks that didn't make it to the bank. So they had to reverse their payments, which moves their invoices back to being unpaid for whatever customer they had billed. And then they had to reach out to that customer to find out, are your checks cashed according to your bank, which they ended up not being. So they had to rebill the customer for whatever it was that the checks were lost for. So if we're not managing these things correctly, it's going to create some confusion down the road of having to reach out to someone saying, hey, that check you sent us, we lost, so send us another one. And then you're going to have some activity in Intacct to explain whatever you have going on. So if we're using accounts receivable, this receipt register is one of the reports that program should be running to look at. And since this is a FY20 item, more than likely this is something that will be seen as a balance on an audit report to ask, why is this undeposited fund sitting out there on your books? Another thing we have to balance with is If I created an invoice, and we're going to go back to that test one, of $2 here, I have it sent out there now as we're waiting to receive $2 against this invoice. So we're expecting $2 to come in. On a minimum occasion, as it happens, someone might commit a typo, and they've requested 20 cents as a drawdown instead of $2. They left off a zero, or they transposed a number. That happens. But so when the money comes in, there's still an invoice sitting out there waiting to collect the remaining balance. And in those circumstances, the monitor has a couple of choices, which is, of course, they can do another drawdown for that difference that wasn't received, or they have another method through accounts receivable where they can create an adjustment and issue a credit to that invoice, because we're no longer going to do a drawdown, or that transaction is no longer going to be used. So let's create an adjustment for the balance of what wasn't collected so we can send that back out. And then that'll get it off our books and no longer show as something lingering months down the road as this thing hasn't been paid for months. And I'm going to look at the trial balance for this test fund. So I'm going to general ledger into trial balance. Trial balance just starts at the current month, so I'm going to leave it there. So I've got our program, our checkbook, and the funding source I used. Okay. So here's that accounts receivable balance for $2 that's sitting out there. That's $2 activity for this month, January. And we can see January opened with a balance because that $10,000 invoice is still hanging out there from prior to this month. There's the $2 in revenue that's been booked because of the invoice. There's no cash that's been received, so we don't have a cash balance anywhere. Our grant award receivable, in this example, I had created a $100,000 grant, and I took it down to a $10,000 invoice. So if we were looking at our own funds, this would tell us the grant award receivable line that this balance is the money we still have to draw down on our grant as it's operating down the road. So if this were maternal child and health's grant and it's received on drawdown, I don't remember if yours is drawn down, Sandy, or if you just get one check, but you could come here and see how much is left of the grant that can be drawn down. So Paulette, you can go look at your trial balance and you would see this grant award receivable, whether you look at Head Start or Early Head Start's funding source, and you can see the balance that's sitting there, how much left you have of the grant to draw. And it should tie out to whatever record HHS would have for you for your awards minus all the drawdowns that have happened. Same thing for you, Ruth, for commodities. If you're drawing down for your grants, Mary has to do drawdowns, you could run a trial balance report for your funding source. You'll have a line that says grant award receivable. And whatever that balance is, like in this case, this one says $90,000, would be the balance you have remaining to draw down on your grant. Yeah, it's good information to know. Like Head Start is such a large balance. That's not something you always know, or you might not have time to log into your funding agency if you can log into that, or however that works. But you can check this quickly through your trial balance report to keep up to speed. And it doesn't matter you wouldn't have access to accounts receivable or order entry. This information is always available on your trial balance. Another nice thing about using this system is if we're not sure who has or hasn't been paying their bill, we can go to what's called an aging report. And so we'll look up the test one. We see a handful of columns. So in my test setup, we have an invoice that hasn't been paid for over 90 days. So we have $10,000 outstanding to us. And then we have a $2 one I created today, so it's less than 0 days past due, it's fine. And so for the programs like Solid Waste or TUC, anyone else, they can look at a report like this and look to see if we're experiencing cash flow problems. You know, we're getting slower and slower in paying our bills because it's taking longer for them to get approved because of cash-related issues. We might run a report like this to see who is and isn't paying. And then people in this column, the last one, 3 months or later, okay, we're going to focus on those guys and start contacting them to start collecting on these payments that haven't been made. And it allows us to cut out who does or doesn't have a balance. So on the report query, do I want to see customers with 0 balances? No. I only want to see those people considered late. And I'm basing it on the invoice date, or you can base it based on the due date, which might be better than the day you created the invoice. And you would get that information of how long it's been since someone has paid you. Each of our programs use slightly different terms on when payments are due. Most is $30 or 30 days. But we have a few like I think childcare. It might be TUC where it's like you get 14 days to pay your bill. So theirs would be a little bit have different meaning to us. In drawdowns for grants, functionally we should never have anything where there's a drawdown that's past due, right? Because once we request money from the federal government, our accounts receivable department should be able to find the outstanding invoice created from the drawdown to receive against so they can pay that bill, and you would have cash to be able to function for whatever you've requested to buy. In the case of payroll, it might not ever even involve you as a user, since the payroll voucher is already created by someone from the payroll department, and the drawdown process is happening from through the program monitor. So you don't ever see that activity happening. But if we looked at our trial balance, we could actually watch those balances fluctuate as now we have something due to payroll and account 14900, and then we see the drawdown activity happening, so our grant award receivables declining and our revenues going up, and then we see our cash start to go. And so all that happens between Friday and Wednesday for all of our payroll. So this creates a little bit different methodology if you're a program like TUC, like Solid Waste. When they create that bill out there, that money is owed to them, as we can see, I created a $2 invoice today. It showed up on the trial balance as revenue, but there was no cash. So if we're going to create a budget mod, most of us are used to going, hey, we have $2 in revenue, now I can put that into my expenses, which is great. But in this scenario, if TUC, Solid Waste, Alcohol Treatment, Adult Corrections, IT, whoever's using this system, attempts to do that and then spend based on their budget, they won't have the cash to back it up. So they have to take extra steps to monitor that. So for some of these programs that all right. Anyone have any questions about this? Here's the slide on budgeting. All sales invoices are created, immediately posted to revenue. How do we know how much money we've actually received and can budget to? It's revenue minus receivables equals our budget availability. So if you've created an invoice for $100, your revenue is 100, receivables is 100. And if you receive no payment, that means your receivables is still $100. So your revenue minus your receivables, 100 minus 100 is 0. So no additional money to budget. And it can get complicated for some of these programs like solid waste. So they've been using Intacct for billing since 2017. So they still have outstanding bills going back to 2017. So when they're looking at how much to budget, they're taking the revenue that they've collected this entire time and the accounts receivable outstanding since 2017. So they can get an accurate resolution of how much budget they have available to them. And of course, I can create a revenue invoice for $1 million. That doesn't mean I can budget it today. I have to show that I've actually received that money through receiving a payment, through creating a deposit, through actually having it shown in our cash on a trial balance. So this is our budgeting system in kind of a really condensed nutshell for this. There's a lot more to it for this today. I'm just going over receiving a payment, not so much creating the invoices and some of the other aspects of this. So if we don't have any more questions, this thing is included on my website, ljstraining.info. So if we go to that, we go to Intacct, there's an accounts receivable section. I have an entire area of just accounts receivable related stuff. A little flow chart that's confusing to everyone else except the people that probably do these. Tons of videos, slides, and this is the one I was going through today that I had off screen so I could follow along. And then the recording of this, once I edit out some of the things, will be loaded up here for future reference. And of course, a lot of other topics for you to see if you ever need a refresher on how to do a budget mod, or there's workforce goal related stuff. You can always come here and from a program perspective, see how to create customized reports, edit timesheets, different videos on workforce goal topics, MARTIS, all that good stuff. So, all right, everybody. Have a good rest of the day. Thank you guys for coming.